Hello there, you're watching Bizworld. Mobile network operators Celcom Axiata, Digi Telecommunications, Maxis and U Mobile are on track to extend 4G coverage to 96.9%, delivering targets under the Jalinan Digital Negara Jendela program. The operators said they have collectively exceeded key 2021 targets, including 4G coverage, base station upgrades and new 4G towers constructed. Jendela achievements from the telcos last year include over 13,800 base station upgrades to 4G and 250 new 4G towers, for coverage expansion to reach 95.4% 4G population coverage, exceeding 2021 targets. This progress underscores the strong track record of collaboration between operators, the Malaysian Communications and Multimedia Commission (MCMC) and related agencies to provide wider coverage and better quality of broadband experience for the people. Besides that, the telco said the multi-operator core network implementation for 3G and 4G demonstrates the feasibility of 5G sharing to accelerate coverage as part of competing networks. As Malaysia readies itself for 5G deployment, a denser, fibre-rich infrastructure will be needed to deliver 5G's key performance indicators. Bank Negara may keep the overnight policy rate unchanged at 1.75% at least until the third quarter of this year to support the nascent economic recovery. However, Kenanga research noted that Bank Negara may be pressured into raising rates sooner than expected due to an expected inflation print and a faster than expected major central bank's monetary policy normalization due to the ongoing Russia-Ukraine crisis. Meanwhile, against the backdrop of Malaysia's narrowing yield premium over US Treasuries and rising US dollar index due to increased demand for safe haven assets amid heightened geopolitical uncertainties, the ringgit managed to strengthen by 0.1% against the greenback. Meanwhile, Hong Leong Investment Bank Research has maintained its overweight call on the banking sector as valuations are undemanding and the overnight policy rate OPR upcycle will benefit banks. It is also projecting a two-year aggregate earnings compound annual growth rate of 10.1% within 2021 to 2023. The fourth quarter of 2021 was a fairly decent quarter since it saw sector profit rising 42% year-on-year on lower loan loss provision, but declining 3% quarter-on-quarter. Additionally, the firm also expects sequential net interest margins to hold steady at current levels before contracting again due to deposit rivalry. Maybank Investment Bank expects net interest margins (NIMs) to flatten or slightly contract this year amid a slower current account, savings account growth and increased deposit competition. The banking sector's operating profit growth to be muted in 2022, having conservatively factored in lower non-interest income from further mark-to-market investment losses as bond yields rise and slightly faster expense growth. In addition, the firm noted that higher tax under Cukai Makmur to offset lower credit costs and project a slight 1% contraction in cumulative core net profit. Positively though, dividend payout ratios are normalizing with upside surprises if they return to pre-COVID levels. The recovery momentum of the automotive and auto parts sector going into 2022 has been marked by a setback, as January's total industry volume TIV sees a slow start post-December 2021's promotional campaigns. According to RHB research, the other factor was supply chain issues due to the recent floods that disrupted component supplies from Klang Valley vendors. Despite that, bookings were picking up as the country was approaching the end of the Sales and Services Tax SST exemptions. The firm also noted Perodua and Toyota have order backlogs of 3 to 4 months, while the bookings for the other marques are improving. That's all the time we have for Bizworld. I'm Nadia Azmi. Thank you for watching and stay safe.